but more about how would it actually happen, because the conversation inside SF versus outside SF is very, very different. So maybe I will tee up Shashi to kind of put some gas on the spark and kind of take us away, if that's all right.
I think the real conversation isn't a binary one of yes, there is a bubble that will burst, or no, there is not. I think it is a probability question. So first, I would say the probability is greater than 0 that we are in an AI bubble. And I'd present a couple of pieces of evidence. First, I'd say the economy of tokens flows downstream from model companies. The major model labs, OpenAI, Anthropic, and the many others kind of playing in that space, those are driving the economics downstream. From there, you have demand for data centers. From there, you have demand for NVIDIA GPUs, cooling from companies like Vertiv, and so on and so on. The entire economy flows downstream from the upstream demand of intelligence, which is in the form of tokens for the frontier model labs. If you agree with all of that so far, then really what we're talking about is what is the sentiment around the demand for tokens, and could that sentiment change? And the thing that I'm suggesting and presenting is tokens are not profitable. Let's just like agree on the basics. Tokens today are not profitable. And if you agree with that, then sentiment can change around something that isn't profitable to cascade downstream to all the dependent companies in the AI economy, that all of a sudden we could face a tightening of this AI entire economy if people suddenly want tokens to make sense profitability wise.
I guess the retort directly, like without kind of adding layers, is just, do you not believe that Anthropic's report of a profitable quarter was accurate or sustainable? And then also juxtapose other profitable companies that aren't just the 2 research labs that are on the cutting edge, meaning DeepSeek or Cursor for a time, or MidJourney, which has been bootstrapped and profitable forever. So I guess how does
it's just not, I think it's not sustainable. I think what we were seeing was token maxing. We were seeing engineers sort of encouraged to maximize their use of tokens as evidence that they were working hard in a way. And I think CFOs are gonna readjust. That's gonna be recalibrated to, hey, like, does it make sense for us to spend X dollars on tokens? What ROI did we really get? And can we get most of that ROI for a fraction of those tokens?
I think so inside of Silicon Valley, token maxing, I think, is pernicious is the wrong word, but obviously it's kind of like a little bit of a red herring. Like it is like I know, speaking for myself, and since Claude Code came out, there have been seasons of me like running my systems overnight and making sure that they're piping and doing stuff all the time that fundamentally did not go anywhere. That is true. And I assume that is a majority experience. I'm not like alone in that. And that is very common amongst a lot of people. 2, though, I do think that if you were to assume, this is not backed by anything, this is just me judging in like perception, I would assume the average person is not quote unquote token maxing, right? They're experimenting. But the context of like, if you're in a company and you have a CFO who's judging what is happening with tokens happening in the company, I would assume most of those tokens aren't being applied in like a token maxing context, right? They're still fundamentally someone like co-piloting with ChatGPT, trying to iterate towards something where the amount of punishment for misused tokens is not a full wasted evening of I'm burning Claude, Goal, or Ralph, or Wiggum's loops or whatever, trying to achieve some end. I do think I agree with the wider sentiment and concern that profitability is not baked into what is the frontier use case. I think because we're pushing so heavily on workspaces being the thing that's gaining traction, like the Claude Cowork, the Codex, as not just a coding system, but as a platform tool, I think there is increasing risk that is just waiting for an adoption curve to accelerate, that then pushes a lot of things into, hey, the wider ecosystem of model usage is not profitable, but everyone's using it that way. I don't think we're there yet exactly, but I do think the concern is valid.
I think we've been in. Sorry, go ahead, Dan.
Well, I was going to say, I think the challenge is, even if looking at it through that prism, which is, I think, perfectly reasonable, it assumes absolutely no vectors of growth in anything but what people are already using. Meaning, like, most people are still stuck in the chatbot ecosystem, right? Most people are not using Claude Code. Most people are not using Codex. Again, not to mention like real world AI, where you're going to need kind of massive amounts of tokens to just power a single humanoid robot, right? So, like, even if we just assume there isn't profitable economics in the current chain, in order to actually have these things not work, you need almost no other vectors of growth to even break even. I mean, Anthropic's already had a profitable quarter. If they just don't do anything else, they can stabilize around profitability if the recurring use just stays the same. And it feels challenging to see a world in which token use doesn't go up, even if the token maxing kind of ethos goes away.
I just don't agree, though. I don't think that they can do nothing and optimize for profit and continue to be profitable, because they have to spend billions training every model. And if they don't do that, if they decide they're going to pivot toward profitability, they're going to sacrifice roughly half of their utilization. The economics work out such that you end up spending about half of your utilization on training and half on inference. So they're going to have to sacrifice the ability to have a frontier model. And they don't have that much of a cushion. If Anthropic were to say, you know what, we're going to pivot toward profitability, we're going to service our use cases, we talked about chatbots and the consumer use. Those are basically irrelevant. The vast majority of demand for intelligence are API-based heavy users, and all of the rest of the stuff is relatively small in terms of the overall demand for volume of tokens. I'm not talking about number of users, I'm talking about volume of tokens.
I think recognizing that tokens right now are very heavily subsidized. Like I've been in conversations where, especially in an enterprise setting, like you need more control over what tokens you're using and how they're getting spent. Um, I know, for example, like I have a case that I'm like thinking about in my head where some developers in org are using a Claude Cowork, they're paying for a max license, that sort of thing. But to get the full company activated, you kind of need like seats for everyone that's all going through the same governance system, all that sort of stuff. That forces the dialogue to go onto API usage, which all of a sudden loses the subsidy. And there is increasing hesitance, I think, on like turning on the pipe in that ingestion. I do think the issue in my head, at least part of it, is when you're looking at activation, I think token maxing right now is beneficial as a marketing thing for Anthropic to be pushing, right? The more people using these models in this novel way that is this long-term reasoning is obviously more data for them. I think if they had it their way in the kind of like natural growth path of the company, every one of these frontier labs is racing to be the default background agent for as much work as possible. With the way that OpenClaw and Hermes agent and whatever kind of shifted the ecosystem to make it really, really hard to use the subsidized tokens to that end, I do think we will see more. I don't know how profitable API usage is. I don't actually have data to know that API usage is a profitable system, but assuming it's at least more correctly margined, most companies should be approaching, because they're forcing existing codes to migrate to that usage system and not giving them optionality, that I think we will see in maybe 3 or 4 months' time, that the amount of API revenue that is generated from background agent use should be closer to better margin. I don't think we're there yet. I think there's culturally a lot to kind of get through before that happens. But to that end, it's not out of the range of possibilities that I think we'll see API usage just become a more common thing in larger companies, assuming adoption happens.
We've lived in this era from COVID to now, where the money supply has been growing. M2 has been rapid, and money has been relatively cheap. So
Sorry,
we've
M2?
had this the money supply, the money supply in the market. So the volume of dollars flowing through the system, dollars have been relatively cheap and easy and circulating readily throughout the system, which means it's easier to put money to work in more speculative assets. We have not always lived in that time, even though it sort of feels like that. The world has not always operated in this easy money regime. And when inflation ticks up, so inflation is relatively high right now. The next Fed chair, Warsh, is he's in the confirmation process. I think he's just confirmed. But should inflation continue to be high? And energy prices are a big factor of this. So energy prices are high right now, and that's a big driver of inflation. Inflation is high. What a responsible Fed chair does in a high inflationary environment is increase the Fed rate. Increasing the Fed rate reduces the M2, which means money is less easy to come by, which means speculative assets get invested in less. So if there's less money flowing around available to go into these speculative assets, I'll tie that into the news of the day, which is Anthropic filing for an IPO. Anthropic is trying to get out ahead of this IPO race, and OpenAI is in that process as well. But I think Anthropic is maybe ahead now in terms of getting to that IPO window. So Anthropic is going to IPO while the money supply is rapid. There are more dollars available to be invested in speculative assets, which we just said tokens are not profitable. These are speculative assets. So if dollars are available, this is a good time to go IPO. Great. But should the tide turn, and should we not live in an easy money regime anymore, if Kevin Warsh comes in and says, we're going to have to increase the Fed rate by half a point to calm down inflation, all of a sudden there's less dollars flowing around available to go into Anthropic to subsidize the next batch of tokens, etc. Imagine this, just try to imagine this thought experiment. What if there was no max subscription? What if everyone was paying on APIs? Essentially everyone who is a professional user paid on APIs only, and there was no max. How would usage and economics change?
Anthropic would make more money in that world. Like these are the two things that I'm not quite connecting in your worldview.
If usage stayed flat, right? But if usage
modulates
based on the cost.
But I think usage staying flat is a poor assumption. I don't know what data there is that suggests it's going to do anything besides balloon. Like all of the financial analysts are estimating tripling, quadrupling like year over year of token usage. Like I don't understand why we would believe that token usage is going to go down versus going up. And the Anthropic subsidies are limiting their profitability, meaning like if they're subsidizing the subscription costs, they're not subsidizing the APIs. So in a world in which the pricing right sizes, Anthropic makes more money. And even in the world in which it does, for some unknown reason, decrease, your argument is that it's not profitable. Therefore, less token spend from Anthropic would also be better on the vector you're arguing for, right? Because like they would be producing burn on that negative economic exchange.
So I think this is exactly the heart of our disagreement. Yes, I think Anthropic would not be profitable if they went to a pure API model, because the alternatives of
but they're
not all
profitable
tokens
right
are the
now
same, right?
with
So
subsidizing subscriptions.
I think not all. First, not all tokens are exactly the same. If I were to use a Sonnet 4.6 versus an Opus 4.6, for example, they just come with different costs. And I think once the open source is just not that far behind. And if you forced everyone to make an economic ROI use case on the tokens, there would just be more switching to lower cost models, in my assumption.
I think so. I was just checking whatever data is available. Anthropic, as of April 2026, seems to be 85% of revenue comes from enterprise and developers, and then the other 15's consumer, like individual. So if you're gonna, I mean, if I were to speculate, in the 85% of revenue coming from enterprise and developers, I would assume maybe like of that 85%, maybe like a third or so of those are individual developers. The rest are companies paying for seats inside of their codes. And some of those seats might be on max plans. Some of those seats might be API plans. I would kind of reckon a bet that the way I don't think Anthropic would have as much growth as they have had if it weren't for such high subsidies, right? Like, I think you have to assume that you kind of lose the ballooning effect without max. That's just generally true. Growth rate slows down, maybe becomes like level, potentially goes downwards. But Anthropic, I think the question at hand to me is, in this lane of profitability, not everyone needs the best plan nor the best model. If anything, that to me is like the weakest, like that's the strongest argument for the idea of like, hey, this sort of like financial mechanism behind tokens is kind of up for a lot of debate, where on one side, I think a lot of use cases that people are building for can use cheaper, older models, whether it's for Anthropic or anyone else. You don't need Opus 4.8 or Mythos for like generating like a Boolean statement, right? On the other side, I think that's also an argument in favor of, in some cases, some companies will try to adopt open source or model routers to replace or section off their usage of the Frontier Lab cloud models. I don't think that will be common enough to make like a gigantic chink in the sort of armor of these frontier labs, but it is significant enough that I think the conversation to me is relatively unanswered insofar as like I don't think people are downgrading their model for use cases yet. That is not common practice, but that should be a really strong financial lever in favor of profitability, I think, for the most part. Because what I would kind of assume happens is similar to cloud, people will have contracts with their one lab of choice. And within those labs, they'll begin doing model routers, and some of those models will have better token economics than the most frontier ones. Mythos is, I would assume, like going to be a hyper profitable model because everyone knows what they're paying for and it's not trying to be a growth mechanism generally. Could be wrong, but I'd assume that's something that can roll out to like an Oracle where they know like, no, we're charging like a 3x margin on Mythos usage. And Oracle's like, yeah, sign me up.
Yeah, I think the only additive thought I have there is in a world in which most workflows use cases are commodity, meaning you can just swap in, second best model or even open source. That just means the pricing power and the top tier balloons. And so long as you believe AI is a competitive advantage in economically important fields, then you're right back to kind of where you were. Meaning like, yes, let's offload email to a B or C level tier, but you're not going to do financial analysis with the second best model. You'd lose out to all your competitors. You're not going to do national defense with the second best model. You'd lose out to all your competitors. So there's always going to be some need for frontier capability. And the question is just pricing power. And we don't know yet. I'm saying we don't know how much that's going to cost, but I mean, said as candidly as I can say it, it's unfathomable to me to believe that there's a ceiling on the price of intelligence.
Have you seen the GIF where the guy's got like a flamethrower and he's lighting his cigar, and it's like center a div using Opus 1 million context model or something? It's like
Right.
there are just so many workflow use cases that don't need the frontier model. The SOTA model is super. I totally agree. The SOTA model is super useful, but there's a lot of work in workflows, and a lot of that work can be done by less than the SOTA state-of-the-art model. And there will be smarter model selection. There will be some, if Cursor or someone like that hasn't done it already, or Perplexity, they're very well positioned in this API world to be the model switching, model selection layer, part of the harness that helps optimize your costs by directing the really intelligent, thoughtful tasks to the state-of-the-art model, and the more mundane but incredibly necessary tasks to maybe the more efficient or faster model.
Say more on the cursor perplexity thing.
There's this layer where, like, if the enterprise wants to have smart model switching, but they don't want to build it themselves, and why should they? Because it's the same problem everybody has. You put your top task, your most highest level abstraction task. Here's my workflow. I go through these 7 steps before I write an article or make an investment or hire an employee or whatever the use case is. You put your highest level task in the top of this system. A machine could be built by Cursor or Perplexity or one of these companies that lives right above the models could smartly select what's the right model to solve each part of this problem. And then you could go to the SOTA model, you could go to the Mythos, and it's worth the tokens for, let's say, a planning exercise or an important architectural decision. But if it's running through some document and summarizing the text in 2 paragraphs, well, you may not need the flamethrower for that one. You can center the div with your Sonnet model.
But to that end, so talking about the frontier labs, like not to make a point out of Cursor or Perplexity, like you could have just said that as anything, but wouldn't that be an incentive structure for Anthropic or OpenAI to like achieve market capture in a world that there's less money flowing around? I would assume most of the money still goes to the frontier labs rather than the harness startups. And it's in those model companies' best interests to one, capture B2B contracts that like limit usage. And then within their own model harnesses, like their Claude Coworks, their codexes, to then do the model switching. And for all we know, I mean, there's absolutely teams in these companies that like they are working on the economics of the older models, right? They're figuring out like, hey, like Opus 4.5 has not been in the conversation for like 2 months or anything right now, but for plenty of use cases, I'm sure there are forward deployed engineers who are saying like, we don't need to be using 4.8 for this thing. Let's roll 4.5. And there's an infrastructure team that's making 4.5 more and more compute efficient, more and more electricity efficient. That, for all we know, like a vast majority of the profitability is just kind of bubbling up as a trailing edge behind what is intelligence capability.
The switcher task will be, it will be highly diffuse. There will be some people who use the OpenAI model switcher and live entirely inside the OpenAI ecosystem. There will be people who use the Anthropic model switcher and live entirely inside the Anthropic ecosystem. There will be people who use the Cursor model switcher and go to Kimi 2.5 for some use cases, or maybe all use cases. Maybe they have a budget, they set that budget inside Cursor, and they rely on Cursor's model switcher to optimize their budget for that month. I think all of those will be true. I don't think everyone will follow one playbook.
But I'm saying to that end isn't like when you're looking at the economics and I guess argument against profitability, like how do you reconcile those two? Like why do you not see that as economically significantly favorable to the frontier companies?
Well, I think right now, if I have a Max subscription, or if I have a team of 10 and all of them have Max subscriptions, then I don't really pay attention to this. I don't need to pay attention to this. They can just go until they run out of tokens, and then they can spill over into some, let's say, 4.6 Sonnet bucket where they're allowed to spend an extra whatever X dollars a month. That system seems to be working for a lot of companies. But the total cost that end user would incur in an API only world would be dramatically higher if they weren't being subsidized by the Max plan. And in that world where their costs would be dramatically higher, they would have to reassess the way they go about using those tokens. They wouldn't just blanket say, go nuts on your Max until you run out. They would be much more judicious.
But I'm saying to that end, so if we assume Max plan, I'm just making an example of Max plan, $200 a month. Like there's some theory that like average usage of actual Max plans in like the worst case scenario, if you were to use up the full usage limit, is like close to like $1,500 or $2,000, something like that, right?
10x.
The argument I'm making is that actual represented value, if you burn out all of your usage, should go down over time. Right, it's $200 a month that you're paying for, but the net cost to Anthropic right now is $1,500 to $2,000. Like that in 6 months could reasonably 1,000. In a year, it could reasonably be 800, and you can keep going down until like they effectively match, or the cost of the tokens being used is maybe most people are on the Max plan. Maybe some people on those Max plan have Mythos access, and Mythos actually costs a hell of a margin that you getting $200 worth of usage gets you $200 worth of Mythos, and that burns out in like 2 minutes or something.
Yeah, I mean, I think what Lakshay is saying is each person in an organization has $200 to spend on Anthropic tokens per month. Right now, they're spending that on a Max plan, which is leading to subsidies on Anthropic side. In a world in which you go API first, they still have $200 to spend. But now the economics on Anthropic side is right-sized. Like to kind of emphasize what he's saying, I don't understand in a world in which developers and consumer users both have to go through the API, that is better for the foundation model labs, not worse. So I'm similarly confused into how the change we all think is coming, meaning like Anthropic is profitable, but heavily subsidizing. In a world where they're no longer heavily subsidizing, how does that make them less profitable?
And maybe some of the conversation to have is the like discussion about the change point happening, because we're all talking about it as like a theoretical thing. Whereas there's obviously a very significant cultural gap between like what people perceive AI can and should do versus what's actually happening. Because everything we're talking about is like theoretical economics and assuming current trend diffuses out into industry, but that's clearly not happening.
Well, I mean,
But
the only pushback
go
I would
ahead.
offer slightly is even if it doesn't grow, even if it doesn't expand at all, it's a company making $45 billion a year. It's still a very healthy company. That's
Yeah,
if they don't grow at all. They just right size the
yeah.
economics and they can remain profitable at no additional revenue. So for these foundation models to not work, you have to assume no growth, no improvement, full stop. That feels completely unrealistic to me.
How far behind do you think open source models are? How many months?
3 to 6 months is like the reported kind of average. If you like take leading open source to leading frontier models.
I with the direction you're going, Shashi, I also kind of assume that like time shortens generally. It's just easier to diffuse models, release cadence is faster. So like
But
recognizing where you're
it
going, like giving some
yeah,
oil that way.
it is worth saying though, you have to have the foundation model to have the open source catch up. Like you can't
Correct.
have the leapfrogging effect.
Yeah.
You know what I'm saying? So there is a world in which you can shrink it, but you can't shrink it to zero.
Yeah, distilling isn't the only way they get better. For example, DeepSeek got better through efficiency, and you could imagine a lot of. What I'm suggesting is there are a lot of use cases where the open source models at, let's say today plus 1 year, cover really, really well. And if those are essentially free, and essentially they're offered or hosted by the cursors and perplexities of the world, the harness above the models, if those are free and offered by those providers, then and what I'm suggesting is a cultural rather than a mathematical calculation, which is that in a world where API is the predominant use for users who may be on the max plans inside organizations today, the way that those are calculated and enabled changes and creates room for switching in a way that a max plan insulates you from switching. Like people that I know on max plans, including myself, like I'm just very unlikely to switch because it's so convenient to stay inside of the Anthropic ecosystem. But if I were paying
Yeah.
attention to the token use at that level where I'm just paying pure API for everything, I would be much more open to switching especially for use cases where I thought the efficiency gained and the quality lost in, let's say, open source model alternative is just not bad. Like it's actually maybe really good for me. And so I could see that kind of switch at least being in consideration.
I just think like culturally though, I find that hard to imagine insofar as I don't so two things. If I am aware of the AI world, mind you, like the average CEO is not. Like they just hear whatever like Forbes or Bloomberg might bubble up to them, right? You probably are aware of Anthropic, you're aware of OpenAI. Even becoming aware of Anthropic probably happened within the last 5 months, despite them actually being in competition for so much longer. Um, Despite that, I would assume the average enterprise case of someone using an open source model under the hood was Cursor training Composer on top of Kimi, where still fundamentally, like you are paying for inference in that case, like the product's doing the inference for you. What the benefit, like that's, or what the company that has done the open source work is getting the benefit of is that you're not paying for the like training. Well, kind of. You're not having to train Soda in the same way that Anthropic's constantly having to push the forward edge. You get the benefit of being a second player. And that has economics that are favorable, sure. But it's just hard for me to envision that in the general market of someone who is not an AI bro, like building on this stuff all the time, that your awareness of DeepSeek contributes to your economics unless you're a very, very tech forward company. And even some of those cases, it's just not that interesting for most product use cases to worry about inference. An API is a lot easier than having to like think about supporting and managing the runtime of an LLM model. I just don't think that's interesting to most people, or even if they're capable of it, they don't want the headache of it.
Would you
Where I
buy
think
that they wouldn't have the headache if they were just to live on top of an existing, fairly well-known harness like a Cursor?
You're still paying for it either way, though, right? Like, what are you getting paying for Cursor that you're getting when you're not paying for Anthropic?
Companies aren't used to open-ended, high variability costs like that.
Yeah, but I guess what I'm saying is like assume that the cost structure is the same from Anthropic and Cursor. Like in the hypothetical that you're outlining,
yeah,
go ahead.
Yeah, in the hypothetical where I'm paying API for Anthropic, or I'm paying Cursor for, say, some flat fee plus a variable component, right? Sort of a blended, because the Cursor,
but I guess why would it be either one? Like why couldn't Anthropic just offer you the same thing Cursor's offering you? I think is what I'm not quite understanding.
Yeah, if you didn't want to live in a purely Anthropic world, and if you wanted to take advantage of the Kimmys, the DeepSeeks, the free models for some subset of use cases, it may be economically advantageous. It may cost you a half or a tenth as much to go to the Cursor monthly deal, where Cursor will handle all of the model hosting in the background. They'll handle the model selection. They'll go to Kimmy, they'll go to DeepSeek, they'll go to Mythos, they'll go to all the models that are in their ecosystem, but selective based on your company's budget. So if I'm running a mid-size 10,000 person company that is not in the SaaS world, which is, I would argue, the vast majority of companies are not in SaaS world. So
right.
in one of those companies where we have enabling technologies, we have lots of human beings, we have humans calling customers on the phone, real life company, which again, I argue is the vast majority of the economy. In those contexts, I would feel, as a CFO, I would feel more comfortable with a relatively fixed cost and a budget that I can set. And if I'm a CFO and I'm selecting between the Anthropic bundle, which let's say is a fixed cost of X plus variability of 10X, and I'm choosing, and the alternative is Cursor, which may be 25% of X as my fixed cost and a variable cost of X. Well, the second sounds really good comparatively.
I don't know why that would be the dichotomy of choice, but I agree with the framing. I think the real value in somebody like Cursor, again, putting the fact that they're training Composer and that's going to be their frontier model, but you just assume that they don't have a frontier model and they're fine being the kind of like model switcher. I think what you gain there is diversity and non-provider lock-in. Like I think that's what you'd actually be buying down that path. That makes a lot of sense to me. Why you'd want to diversify away from one model provider. The historical analog I guess bring to the front of mind is why people still pay for Microsoft Office when Google Drive and the free equivalents exist. Like I agree with you in that CFOs have to start thinking about this, but I don't understand if the frontier becomes not who can provide the best models, but who becomes the most competitive on price. I'm not exactly sure why that argues for anybody but the frontier model companies themselves. Because if they just like don't need to be on the frontier anymore, they just ramp down training costs, right? And then all the economics shift to who can deliver inference the fastest or the best.
Yeah, in a world that has less quote unquote free money, I would assume that the residual capital still goes to the S tier players, which in this case are OpenAI, Anthropic, the labs producing the models that have all the traction. And you end up you still have Cursors and Perplexities of the world, but in that case, like the model switching as a pitch is still something that I think they're all competing on, where it's just more tactically favorable. I think if you're assuming that all of them are doing their own internal like profit management and margin management, the idea of like a composer model still being trained, putting that aside kind of in this lane that Damon gave, it makes sense to me that if you're fundamentally trying to judge like a Cursor Perplexity versus a Anthropic and you're paying for a fixed cost with those companies, for now, Anthropic and OpenAI are probably losing more money per max plan than a Cursor is, right? But I think that over the longer term, we'd see that equalize to the point where maybe right now a CFO is looking at the argument of a Cursor versus Anthropic, maybe being more open for a debate. But I think in the due amount of time, it might be more equivalent. It's just on Anthropic's end, of course, they're paying for training, which is a cost of goods and services that they have to accept that maybe some of these other companies don't. But in a world where the economics are tighter, I think they still get the advantage of getting to subsidize that CAGs effectively, that a Cursor in a world of like much fewer resources wouldn't.
Yeah, I guess the question I would ask is, in a world with no free money, assume everything dries up for one instance there, and all these companies just fall to their revenue, right? They just fall to like whatever revenue they can make. Some revenue is going to decrease, right? Because like the free money trickles down. So like the free money also affects the buyer of Anthropic or Cursor, that kind of thing. I'm struggling to understand why. I'm a buyer of intelligence. I need to code inside my organization. I'm going to do that wherever is cheapest. Why wouldn't the frontier models be able to provide me the cheapest of that experience? Even if that was just meaning they were running open source on the inference they had access to. Like, why wouldn't that be the default? In a world in which it really was like, I have to cut it down to bare bones. I can't take on a single outside dollar. Like, why would the frontier model not be well positioned in that?
The argument I believe is let's assign a probability to the following. The question that we're answering is, what is the probability that frontier models become commodities with relatively small, thin margins rather than the juicy margins that some have modeled in? Imagine that this is a 1 to 3% margin business, and that there are several companies, whether they're open source or closed source, fighting for the token demand for intelligence. What is the probability in your mind that this is the world we end up living in let's call it 2 years?
I agree with you in that like a frontier model is an expensive commodity to produce. And when Mythos comes out, there will reasonably be a similar model trained for less than whatever Anthropic spent on it. That is, if not parity, fairly comparable to the Mythos capability in maybe 6 months' time, 7 months, whatever it is. With that being said, even though the product may be commodity, there is a market edge that the current frontier labs have that is really hard to compete with. Hypothetically, that is a feature of already having the momentum of capital behind you. That even if in 2 or 3 years' time, like there is a like commodity product, it'll be like soda, right? Like there'll be Pepsi and Coke, but there'll be like a ton of other comparable products on market. They just won't have the same kind of brand appeal fundamentally. That if you're the top tech firm, you probably want to be in line with the company that you see branding and new releases from all the time. And like, oh my God, Mythos just like hacked like this poor country or something. I don't know. But it's like all this kind of stuff that like drives like the same consumer buying pattern that currently exists for commodity products, where you still end up having like a market leader. And just in the same way as like what's a good example of a really hard to produce consumer commodity product?
Airlines.
Yeah. Like you would end up with something that's like so capital intensive to begin with that you don't get so many new entrants generally, but you still end up having leading brands that occasionally get competitors, right? It might be niche, but still ultimately like people are going to pay for Coke and Pepsi for the most part. You might have the occasional alternative indie person who likes their like bubbly or something, but for the most part, most of the revenue bubbles up to Coke and Pepsi, in this case, OpenAI, Anthropic, or whoever the survivor ends up being.
Yeah, responding directly, I think the probability that you laid out is virtually zero, like as close to zero as you could reasonably estimate, meaning like in 2 to 3 years, do we reach parity and there's no more value of being on the frontier? Again, I think it's virtually zero. The slightly different question that I think you were driving at is, at what point do we reach capabilities to where the frontier no longer matters to the vast majority of use cases? I would argue we're there already. But I think my point, just trying to articulate it clearly, is that doesn't matter, because all of the incremental value is in being in the frontier and on the frontier, because all of the most important use cases are still coming. And the debate for me is not if they come, it's when they come. Meaning, like, a current 1 million context model is about 20 minutes, give or take, depending on the quality of video you stream to that thing. So to have real world robotics, you have to have better state-of-the-art models in order to realize those visions. And so if we're working in a world in which none of that happens, real world robotics don't happen, then I think we can start having the debate around, is it really worth it to be on the frontier? Again, pushing all that to the side for a moment. In that hypothetical world in which the frontier war, let's call it, is no longer relevant, I think you do see companies start to reduce to airlines, again, assuming the margins are kind of as you outlaid them in your prompt. The question I still return to, though, is why don't you have the current winners still winning? Like, why in a world in which you just may.
You know I agree. Yeah. I think we may be in alignment there, David, and I'll just restate it in the way that I see it, which is, I think there's about a 40% chance, could be more, that we live in a world in which models are low margin, that the current winners are still the winners, right? We're talking 1 to 5% margin, where you can never really get that far ahead because of distillation, or it's easy to poach people and catch up, and there's too much. There's too many ways to build to catch up in a gap of 6 months, whether it's from an open source or from another closed source model. So if you were to buy this idea that, let's say, 40% of the future scenarios have all of these frontier model companies living in relatively close proximity to one another in terms of their SOTA capabilities, then in that world where, let's say it looks like an oligopoly, like an airline industry, where margins can occasionally shift up to 10%, but typically live more in the 3 to 5% range, then I would say, if you have shares in Anthropic or OpenAI right now, and you can get close to $1 trillion market cap valuation to sell them, I would say sell them. Get off of those. Get cash, because you don't know what's going to happen to the valuation of a company that's presently maybe listed around $1 trillion, but in a tighter money regime in, let's say, 6 months, where inflation continues to stay high, the Fed rate goes up, there's less money available to go into more speculative assets, and really all of the AI industry is classified in the speculative asset category. All of the market caps go down significantly. And if your industry looks like the commodity, especially if it's at the top of the funnel for all of the downstream technologies, then yeah, get out, get your cash, diversify.
So I do agree with the premise and conclusion set. That is, if you believe we're headed towards commodity low margin, then we might be reaching peak valuation for the market leaders. That's an argument that I don't think it's a high probability, but I do think it is not virtually zero. Like I think we are starting to get into like the 10s, 20s ish probability that like we are seeing kind of ephemeral market peak. The reason in my mind this is already not a commodity is that if I jump on a flight to whatever, San Francisco, right, and I fly American or United or Delta, my experience is basically the same. There's no like actual competitive advantage for me as a consumer. I don't get there faster. Like maybe it's like slightly more comfortable. Maybe the onboard snacks are like maybe slightly better, but there's really no incentive for me to pay more to get to San Francisco on one plane versus the other, because there's no real advantage. When you're talking about intelligence, there is absolutely a competitive advantage to having the best versus the second best. And that dynamic alone is going to drive economics at the highest end. You might just have hedge funds and investors and governments buying the things. Like that's a possible reality, but that world is so massive because it just matters.
Mhm.
Every scientist in the world is going to have to use the best model. Otherwise, they're not going to be the best scientists in the world anymore, right? Every government's going to have to use the best model. Otherwise, it's not going to be competitive on the global stage. Every hedge fund going to have to use the most competitive model. Otherwise, they're going to fall behind. In any way, in any industry in which there is actual advantage to being the best, you're going to have the state of the art. And so in that line, it is not airlines. And it can't be. You can't resolve to a purely commodities business in that world, because there's always going to be people able to pay more to corner their version of the most intelligent thing.
I have like a mixed thought there a little bit, that like on one side, I think the speed of diffusion will get really, really quick. Where even like DeepSeek was spun out of a quant firm, right? Like it was spun out of like teams doing their own research and dev where they made their state of the art. And if we're assuming that like one, I think I do pretty firmly believe that like models will be fairly commodity, where like if OpenAI releases state of the art 1 week, right now it's a couple of months before someone catches up. It will become half a month, 1 week. Maybe someone will come up with tech that is like, oh, OpenAI shock drop something. I'm gonna like run my like hyper compute cluster to rip it as quickly as possible. And all of a sudden, my hedge fund is running like OpenAI like shadow version or something 75 that is comparable and has, for example, my state of the art might be slightly tuned for my use case or slightly tuned on my data. That in an argument against what you just said, I'm not a firm believer that will be the case, but I think it's a significant double-digit probability that that might be practice in that eventual future. That makes it not purely comparable to like airlines. If we're looking at like who are the best in the world who are willing to spend a lot of money for state of the art, there is an argument in favor of them not being in the category of I'm going to pay the big labs for the best models. Instead, like we have our own internal labs. And I think that is an argument in favor of what Shashi's saying.
Say more about that, because like I agree with the stated premise. I don't understand how the conclusion is an argument that anything
like the economics spread out away from singular winners, if that makes sense. Like it's not in the top of the world, it's not just Coke and Pepsi. It might be more similar, like I guess, or rather like airline comparison, right? The experience of, oh, I'm this, well, again, let's just keep using the hedge fund, right? Let's say I'm like Jane Street or Citadel, right? I probably am in the category of I want the best model in the world. It is to me a double-digit percentage probability that instead of paying OpenAI and always being OpenAI's customer for state of the art, that their economics go to an internal lab, if that makes sense. Correct. Where in that universe, like some of this like hypothetical, like how much of the economics go towards Anthropic or an OpenAI shifts, I think, in that hypothetical.
Agreed. But I think the conclusion is actually just that you get another DeepSeek spin out. Like, why would you not? Meaning like
competitive edge. Like it doesn't bleed out into the industry, but the people who would be spending the most on
the consumers.
Inference that would go to the big labs would be their own like models internally or something. But to that point, like in the wider bubble conversation, they'd still be paying for compute and electricity that bubbles down.
Yeah, they would just become the frontier lab. They just wouldn't be selling intelligence as a service. They'd be keeping it for themselves. That feels reasonable to me. Yeah. Like if all of a sudden,
in terms of human talent, right now we don't have that many people who know how to roll a model. And I would argue that in the next 5 years, we're going to have a dramatic increase in the number of kids coming out of college who know how to roll a model, because this is the center of the universe. This is where all the economics are. This is where the highest paying jobs are. And the ability to come out of university or grad school and know how to roll a model and then be able to go into a Jane Street or a Citadel or a Eli Lilly or Amgen, that value is so high that Amgen is going to be willing to pay you the $500,000 to compete with OpenAI and Anthropic to get you. And they'll invest in their own internal team. And we're going to see more of these bespoke models built on top of something. So I would absolutely see that as a a viable path, especially with the human talent being cultivated right now.
Yeah, it's funny. I mean, kind of unrelated. Like, I'm jumping a tangent. So, Damon, keep the thought that's in your head and resume
yeah,
it.
go ahead.
I was just gonna say it's funny because there's like right now a lot of the enterprise, or I guess like talent poaching is happening from finance into the big labs. And like of course, like in Silicon Valley, there's a sort of like um not like a PayPal mafia type effect, but like startup founders will look at like people who graduated from Stripe or graduated from Anduril as like part of their talent pipeline as like, oh, this clearly is a person who was an early engineer at one of these companies. They're ready to get to the next thing. Right now, there's a lot of brain drain happening from finance to the frontier labs. And it's pretty reasonable to expect that the brain drain in a couple of years goes backwards after all these IPOs happen and all these stocks vest to, hey, I was training frontier models at Anthropic. Now, as you kind of said, like Eli Lilly wants me to do it internally. Jane Street wants me to do it internally once the like economics are quote unquote more stable, whatever that means.
Yeah.
I mean, I agree with all of that. Unless you think the current projections are just wildly wrong, that world can't exist for the next 4 to 5 years because there's literally not compute. Meaning
Right.
like,
Yeah,
congrats, random hedge fund. You want to train your own model? Go buy a GPU. Good luck. You know what I'm saying? You're buying them from Anthropic or from OpenAI. So like, again, no pushback from me on stated premise, but functionally getting there, it would also take like some other person building and manufacturing at scale a new or other GPU that could compete.
This is where the neo clouds. I'm an investor in CoreWeave, which is one of the neo clouds. There's also Nebius and others, and this is where compute for sale becomes really a massive market. Once you kind of see this dynamic take place, where not just Anthropic and OpenAI are training models, but you have the Eli Lillys of the world starting to train models. They're going to go to the CoreWeaves of the world to get compute, and it's a lot of work. It is incredibly hard to set up a functioning cluster of racks. So that's an incredibly hard job. The neo clouds are perfectly positioned to serve that kind of customer. They can fractionalize it, so they can get a big data center, break it up into different leases with different customers. It's exactly the use case that you're describing is the neocloud use case. And I could see that market going 10x because of this kind of function. I want to add an element to this conversation, which is NVIDIA. NVIDIA is such an interesting kingmaker in this space. They are obviously the largest company in the world. They've got the most profit from this AI advance and ecosystem. And NVIDIA can quietly build their own SOTA model. They can do it whenever they want, and they can build it open source. You saw their Hermes work announced, which is their agent, their always on assistant working in the background. But you could imagine when the market shifts, when let's say this scenario we're talking about where capital gets tighter, who has money? Who has money to build an incredibly good SOTA open source model? If demand were ever to falter for tokens, then the arrow that Jensen has in his quiver is to roll and release his own state of the art open source model to drive further demand for tokens. That's what he wants. Ultimately, Jensen is going to do the smart thing to maximize token demand, because max token demand means max GPU demand, which means max sales. So if he ever is in the position where it makes more sense to roll a SOTA model or a near SOTA model to drive token demand, he can absolutely pull on that cord when he wants to.
Yeah, agreed. So can Google, but I'm struggling to square the reality that is token demand up for NVIDIA, but not up for Anthropic, etc. You know what I'm saying? How do you thread the needle?
Let's say Jensen saw the calculus and saw that, hey, we're gonna have more data center capacity than we need. How do we stimulate? How do we prime the pump, so to speak, for more token demand? I'm not saying that's going to happen in the next year or 2 years, but whenever it is the case that pump needs to be primed for more token demand, he's always got that arrow in his back. In
How
his
does
quiver.
NVIDIA increase token demand?
By building their own SOTA model, open source. If the thesis, let's imagine you're Jensen, and let's just say Jensen knows models aren't profitable. There's no money in models. The money is in the hardware. The money is in the energy. It's not in the models. So let's say Jensen knew that, and he thought, okay, great, other people are going to front all this cost. They're going to do all of this work and marketing to drive demand for tokens. They're doing it for me. They're eating all the costs. I'm eating all the profit. This is great, right? That's the world Jensen lives in today. And let's say tide were to turn, frontier model companies no longer are driving demand for tokens. People care about profit all of a sudden. Okay, so Jensen says, okay, I can prime the pump by rolling out an even better model. I've got all the relationships. I know all the neoclouds. I'm an investor in all the neoclouds. I can pump the demand for tokens because I've got all of the pieces of the puzzle.
I don't understand how that wouldn't just transform NVIDIA into the same state-of-the-art model lab that Anthropic is right now. They would just go to burning all the same cash.
That's right.
Anthropic's burning.
They would, but if they broke even on the model, let's just say they don't even care about the model, right? Jensen doesn't care about the models. He knows the models aren't where the money is made. The hardware is where the money is made. So let's just say Jensen said, I don't even care about the model. We'll roll a model just to sell more hardware, right? It's just a sales tactic.
The one asterisk I'd add there is we're assuming for now that the money stays outside of the model, but that's like in my argument is one that like that's not always the case, right? Like at some point it turns, just because right now like these frontier labs are in like grow at all cost economics, that they're not becoming more efficient unless it's necessary to. Yes, there is an opportunity for like if Nvidia were so inclined to just undermine the whole thing and like, like kind of the same way as like Apple as like a platform, like the App Store, they discover use cases and then they release their own like flashlight app or whatever, right? There's a similar analogy here that like you let the frontier labs do all the user discovery and figure out where all of the growth and like product market fit opportunity is. Nvidia hasn't tanked 5 or 7 years of product research and model research. They just drop their own state of the art with product market fit for whatever the use case is, and the economics go away from the frontier labs a little bit. It still ultimately puts everything in the same context of what I would assume in 5 years or whatever it may be, that this situation we're describing with the frontier labs about whether or not they survive, how the bubble kind of goes, you're just moving that conversation to NVIDIA. Like they just enter as a competitor in the space with similar economic situations that right now that they're avoiding, that they just get the benefit of letting someone else do the discovery work presently.
Yeah, I think to me, the open question is whether or not selling intelligence is a viable business model. Like we keep coming back to that. Like, can you sell intelligence for profit over the long term? That to me feels like the unknown. If the answer is no, then the companies that can't diversify revenue streams won't keep present value. Maybe they don't go to zero, but they certainly come off their peaks. For companies that can produce a different revenue stream, those are the winners in that reality, whether that's NVIDIA or Google or Microsoft or anybody else with a profitable, business model that doesn't involve selling intelligence. They get to sell intelligence as a sweetener to support their core business model. I think that's a reasonable argument. It just, again, not to be repetitive, but it just seems so unfathomable to me that there's not going to be a market for intelligence. And again, we really haven't touched robots yet, which are like basically here, not in the US so much, but like China is essentially vertically integrated in most of their important industries with robots. So to think that we're not going to do it again feels, tenuous to me. But just assuming that we're talking purely on software intelligence, it just, again, it becomes truly unfathomable to think that like we're just not going to hit a world in which having the best model is important, even if there is parity. Like you're still going to want competing groups to be pushing down different frontiers. I think the other thing to touch on here in closing is we've talked a few times about the various differences in perspective. And Lakshya, I'd like to get your opinion first, since you're kind of like in the, eye of the storm, so to speak. Well, maybe I'll just start with an anecdote. Every day, essentially, I talk to two groups of people who I would characterize as not being able to be further apart on the kind of AI spectrum. There are people claiming, on one hand, that AGI was here 3 months ago. We've reached quote unquote takeoff. We've entered into recursive self improvement. Software is effectively solved. And the next frontier is robots and health. Basically, we have to cure cancer, which is coming down the pipe, and we have to figure out how to put a personal robot in everyone's home. That's cohort one. Cohort two is people who have no idea any of this is happening, and they're still trying to figure out how to build for a world in which AI doesn't go beyond a chatbot interface.
Mm-hmm.
My median opinion, I would say, is somewhere in the middle of those two. But I guess the question I would pose to the group is twofold. Number one, should we close the divide? And then if we should, how? And again, Lex, I just can't get to you first. As someone who interacts with both these groups, just given your proximity of living and then also some of the groups that you're working with professionally, I'm curious how you are your conversations as dichotomy? Like, is there that dichotomy that exists in your conversations, or not really?
So like the thing I would like add color to that I think is just a good example to make out of, like, we'll run this live. I've never like asked you these questions before, Damon, but both you and I are trying to set up some kind of recursive system for whatever purpose. How well has that gone, in your opinion? Just like Ernest's perspective, yeah. Tell me why it's bad.
It doesn't work. It basically, what you end up doing is some equivalent of like overfitting, to where the model just finds an answer and then just like repeatedly goes to the same answer without any actual self-improvement. It is by definition solving the problem or like accomplishing the task, but it's not actually looping, such as driving towards better and better answers over time.
And so you're fairly technical. Like you're not someone who's a software engineer before, but you've interacted with code and you've interacted with the experience of building things. You have a PhD, so clearly you're like in the work of being academic and scholar about the work you're doing. Like, what is your, I think, diagnostic about, like, if you're to put yourself a percentile about like in the state of building recursive systems, like how do you rank yourself in regards to like, here's how much I know relative to the average person?
Well, relative to the people that are like building AI, I'd be like in the single digit percentile, right? Like I know less than 10% of people building AI. If you just pick me on like a global knowledge scale, I'm probably closer to like 90, just because that thing is so right-tailed. You know what I'm saying?
And how many hours a week do you spend on like trying to fix the recursive system?
5-ish.
Okay. And so the thing I'd say, like, I guess like painting color out of it, like putting your own position into it. One, you are more technically curious than the average engineer in any company. Two, you are more attuned to the conversation than the average engineer in any company. And three, despite all of that, you're still having trouble deploying. I probably, like, similar to you, I probably spend more time on the recursive system than you do, but I'm still having trouble with it because the norms are not defined. The standards aren't defined. There are people describing the self-improvement loops or whatever, but even in the case where they're looking at the thing they've made with very rose-tinted glasses, they're in San Francisco with at least a double-digit number of people who are all asking the same sets of questions, that the amount of progress they can make towards that product is very, very high. And it is also in the context of, as we kind of talked about, token maxing, like burning as much like spend as possible is very encouraged by whatever like 23-year-old CFO exists in like the Sequoia backed company. The problem is, in the average case, the typical CFO can't allocate engineers towards it because it's not primary product pipeline, can't find the talent that is curious enough about it or has enough of opinionation about what's possible here. And I think the nuance of the most unexpected nuance in the thing you're describing that I've seen is because people know we're not there, but they're also not technically curious enough to see about like what it would take to get there. There's fear about burning resources inside of the company on trying to fill the gap when you think that Claude and OpenAI are interested in filling the gap themselves, if that makes sense.
It does. The
It's
specific question
yeah.
I would send back to you, though, is do you think that OpenAI and Anthropic are close? Like, who cares
No.
what I can do? Do you think they're close? Because that's, again, like, so neither do I, for the record. Neither do I.
Yeah.
Like, I think that people
Yeah.
that are like, we've reached takeoff are a little bit ahead. Maybe
Yeah.
not a lot, but a little bit ahead. So, like, I'm not of that opinion either. What I'm trying to outline is, like, we have people that are holistically convinced we're there.
Yeah.
You know what I'm saying? There's a cohort of those people, and that ranges all the way from, like, I've used ChatGPT, and that's it. So, like,
Yeah.
I agree
Like,
with you, for the record.
I think like Gary Tan is very funny to me, for the record. But mind you, I think he's directionally pretty correct in the way he talks about things, or the way he sees like the way things are going is correctly aligned to the idea of like why someone who is an AI takeoff like proponent is, or an advocate rather, like he's thinking about things the right way, that you anticipate we get there sooner rather than later. But he has the benefit of having a fully flexible org around him, and the benefit of his time, I guess, is not under private equity pressure or a board meeting, or like we have a burn rate of 3 days, right? The average person is not in a circumstance that allows them to be fairly whimsical about how to achieve takeoff. And the reason I think OpenAI and Anthropic are not close is the signal that they need a forward deployed engineering like firm effectively is signal that the product services and the harness services are not close to context building and setting up systems that for any generic org can give anyone a sense of takeoff. I think right now, like in a lot of this conversation about profitability, whatever, like in the startup world, like we're able to talk about token maxing because it's something that like in VC like conversations, investor conversations, and Twitter conversations, it is to your benefit to visually present as token maxing. That is like a high status thing to be doing. But in most of the practical world, it is a hard thing to justify when you have like 5 engineers total and your product still needs features that your customers are asking for. And your CFO wants profitability over everything. Culturally, you're aware of these things, but they're still fictitious enough. And even the people on the frontier edges are describing not, I bought this product and did this. They're instead describing, I've sat with Codex for like 48 straight hours. I've been caffeinated the whole time. Look at what I made. And then come in 3 weeks or something, and Claude Codex has made that feature easier. Maybe not all the way there, but like the frontier keeps pushing down the scaffolding people are like fantasizing about.
Yeah, agreed. I want to make one comment I want Sasha to jump into because I'm curious on his take, but agreed with basically everything you said. But it does tee up the second part of the question, which is then, do you or how do you help inform folks that are like, what should I be doing with these systems, right? Because as we were kicking around the chat, the two answers that feel most reasonable to me, neither one land very well, which is like, just wait. Anthropic and OpenAI are going to get there pretty soon. Just give it, months or whatever. Or, completely remake your org, understanding that AGI is in the flight path in the next 5 to 10 years, and prepare for that world. I'm not exactly sure what to do with those folks.
There's a chart that I go back to regularly called the Gartner hype cycle. And in this hype cycle, I would describe where we are presently in the AI world as near the peak of inflated expectations. I think we are reaching some important boundary conditions of, for example, what you both described is getting stuck at a local maxima and being unable to break out of it to achieve a global maxima in terms of a recursive improvement system. These are the kinds of things, these internal system biases that make it very hard to apply AI universally to every problem. We started this conversation with talking about AI running over every business and every use case, sort of, that style of that style of adoption. And that is very indicative of a kind of a peak of inflated expectations in my view. I think we are headed toward a trough of disillusionment. And that will be where the costs don't justify the outputs, at least at this point. And companies will start to get there. Right now, CFOs of of public companies, they've been able to tell an AI story, and that AI story has bought them quite a bit of room to invest in tokens and token maxing and such. But soon enough, those stories will need to be substantiated with margins, and that will require a reassessment of spend. And I think in that world where the models themselves are not that differentiated from each other over the span of 6 months, let's say, and CFOs needing to justify spend, I think we will face some contraction, which is also kind of fed by this monetary tightening that we're inevitably going to see because of high inflation and likely a higher Fed rate. So in this world where CFOs have to reassess and justify margins, they can't just live on story. And these model companies continue to push spend. Half their utilization of data center goes to model training. I think we will reach a kind of local trough of disillusionment in the AI world in the next, I would predict in the next 6 to 9 months. And I think we will then have to justify very specific scenarios where intelligence is highly profitable. There are certainly going to be those, but I think it won't be a linear path from where we are today to that outcome. And I think there's going to be some really important roles for open source models and for highly specialized models, not just these general purpose large language models. And with that, I'd say like my last thought is that we're in this era where software is commoditized and is losing value rapidly. And I would just state my opinion that large language models are software. Model weights are software, harnesses are software, and therefore they will struggle in the same ways that other software companies do.
I mean, the only counter example that's like pretty stark is they solved previously unsolved mathematical equations, right? Like, I don't know how much the typical adoption curves, peak of any Gartner adoption cycles, these kind of things, like how does that translate to truly transformative technologies? If you're of the opinion it's not transformative, then sure, like it's anything else.
I think every transformative technology has followed the same path.
Not electricity, not industrial revolution, right? Like if you think about the ones of the previous like 5 decades, yes, but ones of real transformation, no. So like I think the question is AI the internet or is it electricity?
I don't know enough about the adoption curve of electricity to speak on whether it followed a trough of disillusionment or followed a straight line up. But I would argue, at least from the content that I've seen, there were debates of why do we need electricity? We've got candles. What's the point?
Sure, but would you want to side with people that are like, I want candles?
Like debates, yes, but like the answer's pretty obvious, again, right? No, I'm not disagreeing with you, but I'm talking about market dynamics, and I'm saying that there are always these. This is like saying in the year 2000, you're like, the internet's going to go straight up. Well, no, it's not going to go straight up. It's not that it won't be hugely impactful. I'm arguing that it will be, but I think that the market dynamics will not be straight. It will not be linear.
So to answer, I'll try and wrap somewhat-ish. So I'll try and give like my overall sort of prediction about what happens with this whole recursive self-improvement, like adoption affair. And then at least that'll be my last couple of words before I have to get to my next thing. The way I look at it is, I do think that there are people who are in the trough of disillusionment or whatever that's called in the Gartner hype cycle. Like there are folks who are still early to it. And the matter of fact is across the board, there are companies that are being asked to have an AI story. There's an expectation to have an AI story, but there in some of these companies doesn't exist one yet, right? There is still like board is figuring out, like board has expectations that you're figuring out, like you report up to your shareholders, whatever, about what you did, but it's not truly anything in lane with more than like, we bought GPT business for our team, right? I think in the whole idea of, hey, self-improvement's not being heard or felt by many people, myself kind of included. Like I recognize I'm there maybe with like more team or effort. Like I might have something that's more emulating the experience of like what Gary Tan or YC people seem to describe. Like recognizing I perceive it's possible, just kind of onerous and in some cases a distraction from things that are actually value producing in the short to medium term. What I anticipate happens is there'll be some number of services companies that will be funded like they're startups that will begin building shovels that help with the transition, right? Whether that's the forward deployed engineering consulting firms, whether it's like a YC batch or something that like what they're really good at is saying like, you are a dinosaur. We're going to build a tool that helps you become like something that survives the meteor, whatever that is, like some insectoid or something. I don't know. We will build a tool that helps you like everything you hear like the YC people described about like a denormalized like context graph for your business, like all these tools that like collect your like AI like chats and traces and makes them intelligible in some sort of way that's well governed, that sort of thing. There will be a number of companies that in the short to medium term will do very, very well in this space. Some of them might be underneath OpenAI or Anthropic. Some might be independent. The vast majority of them will probably succeed and get really like high flash short term adoption. And they may likely die, but they would be necessary for that sort of transitionary phase where there's not enough talent to go around of people who can do this within an org internally. So in the next like 2 or 3 years, I anticipate that there are a number of firms that come up that do like, for example, there will probably be like a context graph company that like a Pinecone or like a Weaviate or something rides a fervor, gets really mass enterprise adoption, then is deemed irrelevant. But they've moved a number of companies along culturally that ends up pushing towards quote unquote recursive self-improvement being the popular experience. I don't think we're there yet. And again, a lot of companies will die making that happen. Some will be open source tools, some will be effort that's not like rewarded in the true like capitalist sense, but it will happen that way. We're just, I think, a couple seasons out from people finding the norms and standards of how that should be implemented to then begin pushing it to the CFOs, the CTOs, CIOs of the world.
I put up a chart here just to outline a version of this Gartner hype cycle with some detail about where I believe we are, which is this peak of inflated expectations. I think a monetary tightening would lead us toward a trough of disillusionment in which some companies, as you said, Lakshay, would continue to be silent achievers, continuing to build and grow. Others would fall into the innovation graveyard and die off. And ultimately, we do achieve a plateau of productivity, as we have with every innovation, but it doesn't happen in a straight line, is my argument.
I think the only additive thought, and maybe this is closing and happy to keep riffing not, but like, I'm not sure AI will plateau. Like if it actually gets to recursive self-improvement, then almost by definition, it doesn't plateau. And that's the question. Like, I'm not necessarily saying that I'm predicting any sort of shape. Maybe we do get some relative, again, like I think it's perfectly reasonable to say Anthropic and OpenAI and company have reached valuation peaks over the next 5 years, 10 years. I think that's a perfectly reasonable take. I'm not pushing back on that at all. What I am arguing is that like the curve is up and to the right, and not only just a little bit right, orders of magnitude to the right in ways that have only been experienced a handful of times in human history. And then we can debate shape and we can debate timeline of that up and to the right graph. I think that's all, again, perfectly reasonable. But there is no doubt it's up and to the right. And all we're really talking about is average slope over some given amount of time. And I just don't, again, mapping the worst bear case imaginable, it's very difficult to believe we're on anything but that kind of like roller coaster up and right, I would say.
I agree. And I think in closing, I agree that we are, as a society, on an up and to the right arc. I think we have a lot to thank for the Google Brain team in their attention is all you need paper and the innovation that they did to make it possible, and to the OpenAI team for really kind of enabling this entire industry to take shape and bring it to everyone's attention. and in a way drag Google into the race. And I think we will get up and to the right. I would argue the outcomes are going to be highly diffuse, meaning the people who adopt it early and do well with it will have many orders of magnitude benefit over the people who don't. I'm completely in agreement with that. And as an investor, what I'm trying to bring to this conversation is the potential for dramatic changes over the next couple of years in terms of market sentiment and where to allocate dollars so that people can think through these different possibilities.
Yeah, we can wrap there. I have the one thing I would just like say is I think the idea of recursive self-improvement right now, recognizing that we're all into the tech sphere generally, is we talk about recursive self-improvement without the sort of asterisks that like where that's being seen is software in the definition that Shashi gave of like harnesses, models, code, SaaS apps, that sort of thing, right? There's a very big leap from recursive self-improvement in software where things are easily validatable and easily like measurable to making a testable finance flow, a testable medical flow, a testable like biotech flow, right? That is a gigantic leap that obviously the recursive self-improvement in the software domain will make easier, but we're still like measures away from. Anthropic internally has recursive self-improvement, but their context of recursive self-improvement is not a generic idea of recursive self-improvement, right? It's still like ultimately like they're making ASI, I think, in like a true sense right now, where they're making really fantastic recursive software. But it's not the same thing as like, oh my God, Anthropic has achieved what they're marketing as AGI, like, oh, Mythos can crack any cybersecurity XYZ. All of a sudden, that's not the same thing as Eli Lilly gets to manifest a gigantic benefit from that necessarily, right? There's still like work to be done to get whatever Mythos is today to Mythos-Pharma. And maybe that will enter a recursive loop. The problem is that culturally, the market isn't set up to have recursion in biotech. It's not set up to have recursion in legal. Which is where I kind of think like startups will exist and have opportunity, but a lot of them will die kind of setting up their own guillotine almost in some cases. Anyway, I don't know why I said guillotine. That made it really great. I'm optimistic. But yeah, anyways, we'll wrap there. So thanks y'all for joining. I assume this conversation will continue offline, but I'll catch y'all later and we'll probably record again soon. Peace, y'all.